This will be a short video showing an option trade that we had on Friday, the 2nd of December 2022. I will be showing you some of the details of this option algorithm, but please just keep in mind that this information is not needed to trade our algorithms. The biggest question we get is, what is required of me? What do I need to download? How do I monitor it? Those kind of questions. The answer is pretty simple. Our trading systems are auto-traded for you by NFA-registered brokers. You're able to follow along with the iBroker app, but even that is optional. You get statements from the clearing firm each day, and you do not need to download anything. Do not need to monitor the trades or even understand what I'm showing you in this video. It's all 100% automated and handled for you by the broker. Okay, so this is the TradeStation platform with the options algorithm loaded. This algo trades in both Noble and Paladin. Noble will take the first 2 trades it generates, while Paladin will take up to 8 option trades each day. Keep in mind, this was all recorded live. Once the market closed, I went back and edited the video to speed it up and provide some text for clarity. So in the video on 11:30, I did show you something similar, and I'd like to show you again here, basically just kind of point out what the options algorithm is doing. It's actually pretty exciting the way it works, and for some of you this will be way too much information. Don't worry, shortly you will see the trade occur, and as the video completes you'll see the exit as well. But in essence, what the option algorithm is doing is analyzing a handful of key points during the current trading day and comparing those key points to every day in the past going back to 1995. And it's doing that to determine what days looked similar, how many times it occurred, and what percent of the time did the market close above the key point in the past. As long as there's an edge of at least 57%, then it will place that spread trade, like it did here. When it does this, it uses put spreads in order to stack the odds in our favor, since the spreads add a profitability of about 10% additional to the trades. This means our actual win rate is closer to 67% and above. Just remember the disclaimers we have on hypothetical accounts and the potential for curve fitting. Now this trade executed around 10:10 a.m. Mountain Standard, and this was on the 2nd of December. What we did is we sold a put vertical with the same day expiration of Friday. I do want to show you a few more details on how these put spreads work, so bear with me on this, but the trade consists of 2 individual option trades, and they're combined to create a put vertical. In this case, we're selling a put with a strike price of $40.65. And by the way, if all we did was sell that put, we would keep the premium, which was about 7.75 S&P points. Each point is $50, so that means we're paid $387 when we sell that put. The problem though is that if the market sold off, we could have really big losses. And so we also will buy a put for protection. This all happens automatically by the broker, by the way. The put is sold and bought at the same time. In this case, the put we bought for protection was at a strike price of $40.40, and that option cost us 1.5 S&P points or $75. So when you combine the 2 trades, the 2 option trades, we actually collected $387 when we sold the put, but we paid $75 when we bought the other put for the protection. And so combined, we actually collected 6.25 S&P points, which is about $312 per unit traded. Now what I'd like to do is just speed it up the video again so that you can see how the market closes. And if you're new to options, it's okay, because again, you do not have to execute the trades on your own. They're auto-executed by NFA-registered brokers under the letter of direction. And if you need clarification, just reach out and I'd be happy to explain more details on how the spreads work. So as we're waiting, I would like to use this time to go over the risk disclaimer. Feel free to pause the screen if you need to, but just remember that trading futures does involve substantial risk of loss, and it's not appropriate for all investors. Also, keep in mind that past performance is not indicative of future performance. And finally, I'm not a CTA. We offer the algorithms under what's called the letter of direction. Now, as we wait for the market to close, I want to show you the options algorithm one more time. As I mentioned, these key points are analyzed. They're compared to similar patterns in the past, and this is actually the first day that the algorithm detected that was similar. So in other words, what this split screen is showing you is the top, which is today, and then the bottom is the first day that it detected that might be similar, and that happened to be on the 20th of September in 2012. That day matched up really closely, and using a combination of technical analysis and pattern recognition logic is how it does that. Now the algorithm determined that if the market popped by about 5 points from this level, there is a good chance that it would close higher as compared to this point. Therefore, what we do is we enter into our trade, and that's what we did today. Note in the past trade, this is what happened. The similarities in the days are quite amazing. And I'd like to pause it here and just let you kind of take this in. Notice how the algorithm detected that the 20th of September was a similar day, and notice how they both end up closing. It's quite similar. Now we finally get to see the market close, and this option is 100% winner. This means that both Paladin and Noble were up about 312 per unit traded. In other words, the market closed above our short strike, and therefore we had full max profit, keeping the 312 that we collected when we sold the put vertical. Just remember though that past performance is not indicative of future performance. There's definitely risk involved in trading futures, and it's not for everyone. Thank you so much for watching, and I hope you have a great day. Bye-bye.